Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepho, Modiba, and thanks for joining me. Tonight, I'm joined by Maurice Madiba, Founding Director at Cloud Atlas Investing. Maurice, thaning you for joining us.
Thanks for having me, Tshepho.
Favorite discussion, and this time a little bit more positive. Performance of African markets. How are we looking thus far since the launch of the fund and year to date, I guess?
Yeah. So we launched the fund in April, 20th of April, and as at end of July, the fund was up about 11.7%.
Right.
So it's shown quite a positive performance in Africa.
Which currencies are we talking?
So this is in Rand terms. In dollar terms, it was slightly ahead of that.
Right.
So around 12%, which was fairly decent. African markets this year have been poised for growth. If you can imagine the sell-off that took place last year with the currency devaluations, low equity valuation. So we really managed to launch this fund at the bottom, of stock prices and asset prices.
In terms of the broader picture, in terms of the great performance of African markets, what's driving that? Is that really based on US, European investors looking at picking up stocks on the continent, or was it domestic centered factors?
Yeah, so it's a combination of both. Quite an interesting question, because you've got the essence of foreign participation in markets being quite high in markets like Tanzania, Nigeria, and all of these other markets in Egypt, where the currency did devalue. Nigeria opened up their forex window and they're trading at about 365 to the dollar.
Right.
You've got an uncertain geopolitical environment in the rest of the world. So if you look at emerging markets, developed markets, Europe's also grown a little bit, but Africa is being a place where you've really had cheap stocks that you could buy. Whereas when you look at, then that's the foreign participation. Local participation in markets like Zimbabwe, that's really being driven by the situation that's there, with the bond notes. So you find that people, instead of holding on to the bond notes and hoping that it will convert to one with the dollar, they would rather invest in a security like the stock market. So we saw just towards the end of 2016 quite a pickup in the stock market. I mean, the Zim stock market's down 40% year to date.
Wow.
And that was driven by locals that time, and now a lot of foreign participation is driving that growth.
And that 40%, is that across the board, or is it really focused on a few key sectors? Yeah,
so it's key sectors. It is the banking sector is done fairly well. If you look at markets like Nigeria and Egypt, the high inflation that you're seeing in those markets and some increase in interest rates in Egypt has caused the currency or the banking sector sort of to capture some of those gains. So you're finding that the banking sector has done fairly well. So when I look at our fund compared to your active managers have also captured a lot of this growth. Although last year, they struggled quite a bit with the devaluations and what the case was. But this year, they've captured a lot of that growth. So they've got high concentration in banking stocks in Egypt, in Nigeria, and then a lot of exposure to Zimbabwe. So they've done fairly better than the passive this year. And it's really being driven by concentration in sectors. Whereas when you look at us, it's quite broad. So you've got both food and beverage, you've got healthcare, you've got telecos, etc., that's sitting within a basket of shares across the continent. So I think broadly speaking, the banking sector has driven the growth, but there are other sectors that are doing fairly well, particularly food and beverage.
Reece, it's interesting that you touch on, I guess, the performance or good performance of the banking sector, particularly in Nigeria. Do you think some of that is really driven by a stabilization of the oil price, and thus, or following through from there, a stabilization in terms of the outlook for the energy sector, which means that a lot of these banks, in terms of non-performing loans, we're going to see, again, a floor in terms of the movement thereof?
Yeah, I think that's definitely a contributing factor. If you look at the non-performing loans that were, bulging last year and the year before, really driven by the drop in the oil price.
Sure.
And the oil price this time this year should have recovered already fully from where it is, but it's still remained quite stable. So it's sitting at about $50, $51. That's where it's trading. And if you look at the companies, that would typically then affect your bank's earnings because they would lend quite a bit to the energy sector.
Right.
But Nigeria's energy sector is also starting to diversify away from oil and moving into projects like power, They're looking to bring some power projects online quite a bit. So that sort of positive sentiment would have driven a lot of the recovery in the bank's prices and in the bank's performance, coupled with a greater understanding of what's happening in the foreign currency regime. Nigeria is still managing quite a few foreign currency rates, but I think the fact that we've got a portfolio window where foreign investors can come in and they know this is our window that we can trade has added a lot more positive sentiment to the market and then driven prices much higher than they should be.
Okay. I guess the follow-up question then is that I guess talks to the banking sector. Are we starting to see, certainly within the larger companies, a recovery operationally? Stock markets will do what the stock market will do in terms of returns, but are we starting to see growth coming back in terms of earnings, or are we seeing revenue growth across businesses? Yeah,
so on a company by company basis, it's hard to gauge in a specific sector, but if you look at some of the activities on the bank, you definitely see a lot more spending. A lot of lending, particularly in West Africa, a lot of adoption of technology and offering a lot of services to the retail market of the banking sector.
Right.
But if you move that across to Kenya, where you had your fixed interest rates, you saw a bit of consolidation, and you could see a bit of consolidation across the banking sector in East Africa. So you do find that the bank's activity is showing that, operationally they're fit and ready to capture a lot of this growth. But it's two different stories on the different sides of the continent. Where in Nigeria there's been some good growth, in Kenya it's been fairly stable. They've also done well, their banking sector, but they have to contend with the likes of Safaricom, which is almost like a mobile bank.
Right.
That does 3 billion worth of remittances. So you've got two different scenarios that are taking place in the banking sector across the continent.
Okay, that's an important point. If we then take a step and think about the geopolitical landscape on the continent, we've just seen elections coming through in Kenya. Are we starting to see the market almost acknowledging that, yes, there are elections going to happen, but overridingly, democracy is working a little bit more positively on the continent?
Yeah, I think that's definitely quite a big push. If you look at SA, we were sort of running into a lot of political trouble at the same time Kenya was having elections. And you would expect, the currency in Kenya to sort of blow out when the opposition came out and said, look, we are going to contest these results. We don't believe they are fair or they're accurate. And, the Kenyan shilling didn't lose much against the dollar during that period. So it shows you that before the elections, markets are starting to price in, positive sentiment around Africa actually running free, fair, smooth elections without there being an outbreak of violence afterwards. You found President Donald Trump just congratulated the re-election of President Uhuru. But, there is a lot of things that are taking place globally which maybe have overshadowed what's happening in the African political landscape. Right. And as a result, you find global investors not reacting as quickly to what might be happening in Kenya because their focus is between America and North Korea.
Now I'm going to ask you that very easy question, which is, given this rally that we've seen year to date and the underlying fundamentals that you've touched on, would you say that we are positioned for a continued bull market with an African listed businesses, or is it still really that very volatile phase that's driven by not just local factors on the continent, but by factors in the US, in much of Europe?
Yeah, so again, it's a combination of both. But I would lean more towards, the fundamentals of Africa doing fairly well. So if I look at the consumer market as an example, like food and beverage, there's a new plant that's being set up in West Africa by Heineken, for beer consumption. So Nigeria leads in terms of beer consumption on the continent, and then, it's followed by Uganda. Botswana, funny enough, is higher than SA. So you find a lot of a lot of consumption patterns also changing, which is creating a nice drive or a nice reason for a bull market in the African space. And then hand in hand, that will go with the retail sector or real estate sector. So in Zambia, you know, they had the malls are going up in Zambia at quite a rapid rate, and they still have a lot of tenants that are coming from South Africa. So the likes of ShopRite, Checkers being anchor tenants in a lot of these malls. So it's driving consumerism on the African continent. So I think that that sector, food and beverage, is definitely poised for a lot of growth. While the banks will fluctuate with the currency, that sector in real estate is poised for growth on the rest of the continent. So you find that, you know, if you look at the brands of beer that people drink, in any given time, people will be drinking, you know, whatever brand they choose to have. So you'll have malls going up at the same time. You'll have product that's going into store. And it's a tale, I guess, of two different worlds. So one is, while that sector does well, if there's no industrialization that follows that, it can start to hurt that bull run. Because you would find that as much as Zambia does have 4 new malls or 7 malls that have opened up, they're also importing a lot of goods. You know, Botswana also imports a lot of goods from South Africa. Zimbabwe is still a net importer of goods. So if you find that all of your manufacturing sector and your industrial sector isn't picking up at the same pace to meet that demand and create local product for that demand, then that bull market could be short-lived.
Okay, now let's talk flow. Broadly into African markets. Has this rally been a function of you know, a low liquidity rally where only a handful of assets have flowed into continent stocks, or are we starting to see a return of big money into the continent where lots of investors are plowing back into African stocks? Yeah.
So you find that in some cases domestic participation or low liquidity has been experienced. Like if we look at the Vodafone IPO, you know, the Tanzanian government had put that online a few months ago, and they only closed it off to local participants. They didn't raise nearly as much as they did. And then recently they opened it up to foreign participants, and you saw that the volumes just went up. I think it raised about $213 million US. Right. So it's quite significant to show you that flows have been coming from foreign investors. But does that mean foreign non-African investors, or you know, just you know, non-local investors? So I think you found that a lot more African funds are starting to go into Africa and attack these opportunities and capture them, as opposed to it being investors from developed markets like the US or Europe. You're finding that our local pension funds are taking some of these opportunities head on.
Perfect. Let's leave it there. All right. Thanks to my guest, Maurice Madiba, Founding Director, Cloud Atlas Investing. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepho. And send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.